webinar. My name is Colby Mintram with Volt Strategic Partners. Ecolomondo is a publicly listed company on the TSX Venture Exchange. Their symbol is ECM. Joined today by Elio Sorella, Chairman and CEO of Ecolomondo, and today we're going to be discussing a number of topics with relation to recent progress. Please note that today we will be making forward-looking statements. You're advised to read the following disclaimer on the screen. And please be advised, Volt Strategic Partners is not a registered investment advisor or broker-dealer, and more information can be found on our website, voltstrategic.ca. Without further ado, let's get into what we're going to be discussing today. So today, we'll give a brief introduction to Ecolomondo to anyone who's new. We'll be showing off a video that was actually taken today at the Hawkesbury facility. So we have some interior shots of the equipment running. We'll give an update on Hawkesbury, update on Shamrock, and then an update on everything else since the last webinar. So Ecolomondo is a commercial scale clean technology company focused on the development of proprietary TDP technology. This technology currently transforms end-of-life tires into high-demand commodities, including carbon black, oil, steel, and then is a near-energy self-sufficient process. There's been well over $100 million invested into the development to date, and the flagship facility is currently, we'll get into the progress a little bit later, but TDP takes scrap tires and processes them down into their, essentially their building blocks. TDP is a GHG emissions reducer, and we will now go into the video. So Elio will be able to give some commentary on what you're seeing in the video, and then we'll discuss afterwards and enter into a fireside chat, going into all the questions that were pre-submitted. Excellent. So that is an overview of the process, everybody. Elio, without further ado, let's get into Hawkesbury. Can you tell us a little bit about progress and what's going on there?
So first of all, I want to thank everybody for joining in. It's heartwarming to see so many of you are taking the time to listen to what we have to say. We took the video today because we wanted to show that all departments have been commissioned and are ready to operate. They are what you've seen. Each department has the apparatus needed to start commercial operations.
And so obviously we've heard a lot about the TSXV strike in the news and your MD&A. Is it correct to say that the actual, everything's done at the plant? You're now just waiting to receive the rubber stamp?
Well, the plant itself is mostly certified. We received inspectors, and we brought some inspectors from as far as Calgary to come in and certify the apparatus that we have in place. And the only thing that we have left right now is minded that every part of the line has been visited by an inspector. They made recommendations, and we only have 2 minor inspections left to go, and that should be all completed within a matter of a couple of weeks.
Excellent. And there's obviously from the strike, is there any way that is there any liability on TSXV or anything that Ecolomondo would be able to make a claim, or is that not an option at all?
No, it's not an option. There's things that happen in business. Employees have issues. They deal with it accordingly. We took it in stride and we worked around it.
Excellent. And obviously the world's changed a lot in the last 6 months. There's a lot going on even since the last webinar. We've seen the markets taking a tumble. How have inflation and other cost increases, how have they affected the actual value of the end products and value of the inputs as well?
So we all have to understand that the value added to our process comes from the recovered carbon black. So in our particular case, the value of the recovered carbon black is even higher because we sold our carbon black in US dollars. The pricing is still the same, and we are getting the benefit now of a higher exchange rate. So we are actually doing better. The steel took a slight drop, but in our business model, where it is today, we even had a lower price in that. So we're covered there. And the oil, it's an international market, but the offtake agreement that we secured with the oil is based on market price, but our business model was at a lower level than what we factored in to or what we sold to our customers. So we're well covered commercially in the contracts, the offtake agreements that we signed, and we've covered our bases with regards to our revenue and our EBITDA and whatever goes.
Yeah. So the strength of the US dollar is actually helping the company, not hurting it, unlike other manufacturing companies.
Most definitely, because we're selling most of our products in US dollars.
And does the company employ any FX hedging at all?
At this point now, no, because eventually we will, and some of my other companies are doing that as we speak. But we will cover that as we get into the commercial operations and generate revenues in US dollars.
Mm-hmm. So you recently amended the financing agreement with the EDC for Hawkesbury. Can you give us a little bit more details on that and what that means for the company?
Well, COVID began over 2.5 years ago, and companies that started into their projects started to feel the effects immediately. People were getting sick, higher costs, so supply wasn't readily available. So we faced considerable turbulence during the pandemic. We made do with it. We worked extremely hard. My team made sure that we were vigilant in supply, and we had great partners. The EDC are great partners for us. They were there. They listened, and I never asked during the heart of the pandemic for additional subsidies or additional help or whatever, not subsidies, but additional help. But they were always there. They always listen, and they understand, the consequences of the pandemic, and they've been great partners. So what we've done, obviously, the pandemic delayed the startup of our plant, and that eroded a lot of, not a lot, but some of our working capital and some of our funds that we had designated for other things. So we had to keep paying interest all along during the project. And when the time came, we eroded some of the capital that we needed. So by closing this deal with the EDC with our third amendment, we were able to recapture some of the erosion of our capital. And that was obviously a consequential benefit to the company.
Yeah, especially given the current market, and extending that capital requirement is huge. You recently, speaking of capital, you recently exercised $1 million worth of stock options. You've been at this for so long, you've invested so much money. Why another $1 million?
I didn't exercise the $1 million worth of options because I don't believe in the company. Obviously, since the day I bought the company, I was totally committed to its success. And exercising $1 million of options is only a progression of my commitment to the company.
Mm-hmm.
The video you saw today was a culmination, or is a culmination, of many years of work and dedication, and contributing the amounts of money that I did only attests to that fact. But I would not have ever been able to do it by myself. I had to have a great technical team that allowed us to spend the money in the right places.
Absolutely. Switching back to Hawkesbury, how long would it take to ramp up the plant to full capacity once all the permits are secured?
Well, as all the stakeholders that are on the call understand, I'm not one to predict. However, I believe in giving information that is accurate, and when you can't give accurate information, you give no information. Okay, I understand that sometimes it's a little bit frustrating, but I'd rather give no information when I have nothing to say. So, however, things are different now. You saw the equipment, they're running, they're mostly certified, products are being made, the lines are commissioned, we have the offtake agreements, we have everything, on the go. I can tell you without hesitation that we're very close to startup. We're looking at perhaps weeks rather than months. And however, uncertainties are always there. And once you get to destination, we'll definitely announce. But I would say it's very, very imminent.
Mm-hmm. And just to circle back on some of the economics of the plant, your tipping fee, is that locked in?
The tipping fee, we still have the tipping fee. We're working, our fees, our offtakes are still there. We're working now on the carbon credits. That would be another source of revenue for us, which is not factored into our business model right now. But we should have something very solid in the coming months.
Mm-hmm. And with the Hawkesbury facility, what is the percentage of car versus truck tires?
In Hawkesbury, our plan is 20% truck, 80% car. But that is not a mix that really affects too much of our model, because we're paid our tipping fees by the ton. So truck tires are bigger, you need fewer tires, so we still get the $120 per ton.
Mm-hmm. What are the output prices of the carbon black and the steel and the oil?
Well, right now for the carbon black, we're getting $1,400 a metric ton. The steel, we're getting about $435 a metric ton, and the oil, we're getting about $90, the equivalent of $90 a barrel.
And what does the how many tires does the Hawkesbury plant process in an annual basis?
We expect to process about 2 million tons.
2 million tons. In terms of, let's shift gears to the other project on the horizon, Shamrock. Can you give us an update on Shamrock?
Well, Shamrock is, it's something that's been in the works for a few years now, where we've bought the land, as you know. As we speak right now, the infrastructures are being built at a cost of $2.6 million. The people, the local government and county in that area have supported this project enormously. So things are on their way. We're hoping to break ground for the building sometime in the early part of, in the second quarter of 2023.
Mm-hmm. And the push on that, was that like, how has the financing environment impacted the plans on Shamrock?
Well, we're hiring, or we hired an investment banker that's supporting this, the financing part of it, and we're working very closely with them. I'm not ready to report on the financing, okay, but we have a plan of action, and we believe the current economic situation that's happening now impacts us, but not material, because when we borrow funds, we borrow for the long term. So long-term rates have not gone up. We don't feel the pain that the short-term rates are feeling right now, because they average it over a longer period.
Yeah, so you're like long-term, you're talking like an over 20-year term for a financing vehicle?
Correct, 30 years.
Yeah, so that's obviously something to track long-term, but as you say, the long-term rates have not drastically been impacted. Switching gears here to other project development, we know you've got a lot of projects on the go globally, but what's the status? Like, where's the company's focus at?
Well, management's been very proactive in this area, and we do have other deals going on. I have been very hesitant to announce certain things, or because we're all waiting for the Hawkesbury plant to be operational. Once that happens, it's a new ballgame. At that point, we'll be a little bit more dynamic in how we announce, and we will be a little bit more aggressive in closing our deals.
Mhm. Yeah, so the strategy has been all hands on deck at Hawkesbury until you're able to move forward with some of these other projects.
Well, it's all hands on deck everywhere. So we've been working at this for a few years now. Obviously, our focus has been on Hawkesbury, our technology, our global expansion. You see, Texas is our first step. It's still a substantial project. I mean, we're budgeting the cost of that project to be at 93 million US, and we expect to finance about 73 million US.
Mhm.
So it's planted. The Hawkesbury is up and running, and our plant in Texas is we're breaking ground on it. Things are going to go very, very fast.
And speaking more broadly in the sense of value creation, is the company seeking any senior exchange listings or any other additional listings to provide more liquidity to shareholders?
Well, what we're looking at, we have a lot of U.S. customers right now, say shareholders, and we have people from overseas. I mean, the company itself is being followed by many, many people. If you look at, the corporate history of the company, you will understand that we, as a startup, have brought a tremendous amount of shareholder value. We've actually increased it, whereas most of our competitors have actually gone down in value. They've increased and gone down. In certain ways, we had a little bit of a blip last year, but we've always been steadfast. So if you look at the shareholder value, the growth that we have brought an increase in value to the stakeholders. So, and people on a global scale are noticing. They notice the company, okay? And we're going to take advantage of that growth, and we're going to take advantage of that increased shareholder space as we go along. More people will bring more value to the existing shareholders.
Mm-hmm. In terms of broader strategy, Elio, paint the picture. What does the next 12 months look like for us, the shareholders?
Well, listen, for the shareholders, like I mentioned, we're going to be a little bit more aggressive once the plant is up and running. We're going to be a little bit more aggressive. We're going to be raising more funds. We're going to embark on our U.S. and our European expansion. I really believe in this technology. I really believe in the company. I really believe that we serve purpose. And every single person that invests in Ecolomondo will serve that purpose, hand in hand with us. What you've seen today is tangible. It's not that we have to design. It's not that we're going from lab scale to industrial scale. Not, we're there. I mean, people that invest in our company, they invest because they see the vision. They buy and hold the stock, and I'm happy for that because I'm not a believer in pumping the stock. So some people make immediate gain, and some people have long-term pain. I believe in giving every shareholder, whether large or small, the same opportunity to create additional value for themselves. And I've worked towards that, and I believe I'm achieving that goal. Once this plant is being built. It will make my life a little simpler, and it'll. I'm a visionary in certain ways, and I assure you that we will bring that vision, and it will be reflected in. I hope it will be reflected in our stock price.
Mm-hmm. We'll open the floor to questions, everybody. So if you have any questions, feel free to submit them, and we'll answer as many as possible. I think we covered off the main ones that were pre-submitted, but feel free to submit any questions, and we'll go through them. In the meantime, Elio, are you where are you? Are you at your office, or are you at the plant?
I'm actually in the boardroom of the Hawkesbury plant.
Right on. It's made a lot of progress since my last visit. Explain to us a little bit more the business model and the business strategy going forward, and building new plants.
Well, there's two ways of looking at it. The first way is you become a manufacturer and a seller of equipment. And these type of plants and this type of equipment costs millions and millions of dollars. Your market is limited, and it takes an enormous amount of energy to sell one of these plants. We learned that part a long time ago. We understand the simplest way for us is to find locations, get government support, build them, operate. It creates two main benefits, or brings two main benefits to our shareholders. First of all, it gives us a steady flow of income, not sporadic. And secondly, it will increase the value of the company, because we become a reseller of recovered products, or that will benefit the circular economy, and where demand is increasing at a much faster rate than the virgin products, because people are looking to have lower costs, and they're looking to get a steady flow of supply. So our vision going forward corporately is to build these plants, operate them, and generate revenue from the products that they generate, and become a key player. Once we build our Texas plant, we will be with our Hawkesbury plant right now. Once we're in full production, we will already be producing the largest amount of recovered carbon black in the industry. And that's why we were able to sign these offtake agreements, large amounts, because we have large amounts. Competition hasn't achieved that threshold. And as they're gaining ground, we will be gaining ground in Texas. And we will be hopefully announcing, as we gain momentum, other projects that we're going to be doing in the US and overseas.
And I think you spoke to this a little bit, but would you consider it all a license model, or are you just focused on the build, own, operate model?
A tree that's steadfast in a hurricane could snap. We have our model, but it doesn't limit us to that model. We understand that in certain parts of the world, regulations are different, demands are different, the needs are different. So we're flexible to sell some of these plants or equipment or licensing, as long as it's to the benefit of the company, and it leads to increased shareholder value.
Here's an interesting question. I think the best way to ask this would be, in Ecolomondo's model, what do you price oil at long term?
Our oil is synthetic. It's already been pre-processed. It's high in carbon content. It's got a tremendous demand. So we're not selling it for bunker. We're selling it to be reused. So we actually garner a higher price than what it is. Look, the oil we're selling today is at $90 a barrel. If you look at, didn't see it this morning, but yesterday it closed around $78, $79 a barrel. So you can already see that we're bringing in higher value. As we expand the company, we get more plants, then there's a whole new horizon that comes to us with the oil. So quantities will bring additional benefits. Same thing with carbon black. Quantity will bring additional benefits. We can demand a higher price because we have a higher volume. We can securitize supply. But these are all key ingredients. Going forward, will play a major role in the success of our company.
Have you produced any carbon black? And if so, have your customers been supplied any samples?
We have produced carbon black here, okay? And we have sent samples to over 20 companies. And I would like to, we get only accolades on the quality of our carbon black. Everybody wants to buy it. We can sell, if we had 10 of these plants, we'd sell it all today.
And your carbon black, do you is there any smell or fumes or anything in it?
No, our carbon black is exceptional in quality. And I'm not saying that. I get that from the customers that are buying it. No, we have from our plant in Hawkesbury, we have our customers on a allotment. We can't give them what they need. So we want to sell a bit to everybody. So they're all on the allotment.
And have you tested the quality of your recovered carbon black versus peers?
In the past we have. However, we analyze our carbon black all the time. We even have our own lab here in Hawkesbury. But we let our clients do the talking when it comes to that. We tell them what we're giving them. Every batch is tested for quality, and they make the decisions whether it's accepted. Up to now, we haven't heard any negative comments from anybody.
Do you have a vision to expand into recycling other materials, or are you just sticking with tires?
Well, our technology, tires are tires, but if the reason we start with tires is because tires bring the highest value, commercial value for the recovered products. You have plastics. Plastics are a plague to the planet. We have the technology today that could decompose the plastics. And when we're done with it, same as a tire, we have no residue. We reuse everything. However, the added value, the commercial value of the products we generate do not add up to the same numbers as the tires. As governments get to understand, and they do the same thing as the tires, where they give tipping fees that are large enough that, and the stakeholders are ready to invest the money because they'll make a return, then we're there. So we are working right now with several industry players where they need the oil from the plastics to create biofuels. We are looking at some third world countries where they need the oil to generate energy. So we're looking at other avenues right now and other horizons for the other types of feedstock.
Oh, it's great news, and I think it's an exciting avenue as well that hasn't been talked about very much. When do you expect Ecolomondo to begin to become profitable?
Well, as the production is ramped up, it won't take much time because our EBITDA here at this plant has increased because of the increased value of the recovered products. We also have been able to mitigate some of our costs by automating more.
Mhm.
So I don't want to say exactly when, but I can tell you it would be fairly soon, within months.
And your loan on Hawkesbury is a Canadian dollar loan,
Yes,
and then you're receiving all your revenue in US dollars from that
right.
facility.
Which that in itself has, brings a lot of future value to the company, and that will allow us to convince other people to invest in our company.
Mhm. Are you able to hire a TSSA inspector on your own dime to come out and speed along the inspections, or is that out of your control?
No, we pay for every inspection. The TSSA right now are doing inspections, contrary to about a month ago. A lot of the management teams are out there doing the inspections. The only thing is, instead of having them in 3-4 days after your request, it could take 2-3 weeks after your request.
Mhm. Just to answer this question as well, so when do you have to begin paying back the loan?
We will start paying back the loan in 2023. So we got a postponement of the capital, we got a postponement of the interest.
So you're not currently paying any interest or capital on the Hawkesbury facility while this is ongoing?
The interest rate now has either been postponed or it's been postponed and added to the end of the loan.
Okay, so you don't have a monthly cash flow towards the financing without any revenue.
Not at this time. I mean, we have other covenants that we agreed to with the EDC, but we're well positioned to meet them.
Has Ecolomondo done a life cycle assessment on the carbon emission reduction versus virgin carbon black?
We've done an analysis. You need to do that type of analysis when you're applying for your permits. And you also need to ensure that your emissions are within the guidelines prescribed by law. So we reduce carbon emissions by over 90%. Nothing is perfect. However, we can actually be considered a green technology. Not only do we do it green, but everything that we've done here is to the safety of the employee. We respect all the standards. We monitor all the standards. And so a life cycle assessment will be done once we're in full operation and we're actually able, because now it's all based on estimates. When we do it, it'll be based on reality.
Mm-hmm. Yeah, you've done what we could classify as, benchtop analysis, and now you have to do the actual physical analysis once it's operational.
Correct.
What is the amount of the EDC loan, and what's the interest rate?
The EDC loan is $32.5 million, and the interest rate is approximately about 8% right now. It's a little higher because interest rates went up. So it's a factor of CDOR.
Is it a variable interest rate or is it a fixed?
It's varying.
And what is it? What are the variable terms of it? Like what is it? Is it towards Bank of Canada prime? What is?
No, it's CDOR. It's
Oh.
based on a percentage above CDOR.
Yeah, and is it capped as well, or?
No, it's not capped.
Yeah. What would you say the biggest risk you're facing right now is?
Well, listen, biggest risks, it's all representative. If you look at the geopolitical situation of the world, a nuclear war, big threat. If you're looking at operational, I think we've mitigated pretty well a lot of the risk by doing a lot of the work in Oxford, in Cote d'Ivoire. We've implemented the improvements and all of the technology that we developed there here. The world pricing, the global pricing of recovered carbon, recovered products has never been higher. So there's a lot of mitigating factors that come to our benefit at this point. So the way it looks right now, governments are increasing interest rates, slowing down the economies. But we do not believe it will impact our commercial success of our here in Hawkesbury and the plants that we build. You have to keep in mind, we're producing waste, we're getting paid to take it. So we're getting paid for our feedstock. And then we're taking that waste and we're generating other products that we resell. I mean, it's a business formula made in heaven. So but we have risks, obviously, but right now they've been mitigated because of the geopolitical situation that's creating a substantial increase in the value of our products.
Mhm.
Here in Canada, the exchange rate is better. We're not talking about 1%. We're talking about a substantial amount of if you look at the increase in exchange rates today, and if you look at that, we're generating, let's say, 16, 17, $18 million of revenue, and we look at our own, that's $32 million, we're almost covered half of our interest payment just by the exchange.
Mhm.
Today, we all know that the exchange rates fluctuate.
Not sure if you'll have the answer for this one, but the CapEx for the automation of your TDP plants, one, how much does it cost? How much money does it save you? And then what would be the payback of this CapEx versus a manual plant, let's call it?
Well, the CapEx is, if it costs millions to develop over a period of years. So the development of the automation was done before. So it's not factored into the cost of the development cost, is not factored into the cost of Hawkesbury. That is something that will benefit the company and will benefit our technology. I'm talking about the efficiency in technology. So the cost here in Hawkesbury to implement that automation has probably been in the vicinity of about $2 million. Payback, it will pay itself off in perhaps 4 or 5 years. But keep in mind, the biggest payback is in the efficiency. Okay. Having the least amount of human intervention improves the efficiency and the safety of the process. So there's other benefits that are equally as important. So it's not only a financial cost to it when the payback is. What is important is, the safety and the quality of the product, because our automation system affords us to be able to reproduce the same batch at the same process parameters at all times, and ensuring a consistent quality, which is critical when you're selling resources. Customers want consistency.
Mhm. What is the tipping fee per tire in Hawkesbury?
It factors, it's $120 a ton. It factors out to about $1.20 a ton.
$1.20 a ton? And is the tipping fees Canadian or US?
Canadian.
Have you spoken to tire companies? Have you partnered with tire companies? What's the status of that?
We speak to tire companies all the time. So tire companies make great press releases, but add little to the bottom line. So if eventually we do business with a tire company, it's not going to be a bottom line situation, because they're buying virgin carbon black for almost the price we're selling recycled carbon black, recovered carbon black.
Mm-hmm.
The average company that buys recovered the virgin carbon black, they're paying much more than a tire manufacturer. So we're concentrating on this segment of the market, not so much on the tire manufacturer. But we have spoken to every single major tire manufacturer over the years. And if you look at what they do, the tire manufacturers, they walk into a company when the company's cash strapped, make them a proposal, and because the company needs money, they sign these deals with these tire companies that not even to their benefit. I can assure you that will not be the case in Ecolomondo. We're well on our way in our business plan, and we're well on our way on our success, and without the tire manufacturers today. Eventually, as we expand volumes, and we might need the tire manufacturers for our offtake agreements. They might become strategic partners. There's a multitude of options. Okay, but today, we have ample offtake agreements that we don't have to depend on tire manufacturers. We'll actually depend on them for feedstock.
Mm-hmm.
I want you to know that on the October 13th, I have the Tire and Rubber Association of Canada coming here to do a meeting, and where all the tire manufacturers are going to be present, either virtually or in the building.
Oh, here's a great question. With electric vehicles, is there an increase with tire wear per mile versus an internal combustion vehicle?
So I'm not a scientist, unfortunately, but I'll go based on the tire's a tire. So obviously, electric cars go a little less faster than conventional cars. So, tire wear is dependent on where you situate. If you're in a country that's cold, your tire wear, and you're traveling on snow for 3/4 of the year, your tire wear is less. If you're in Florida or you're in California where temperatures are getting to 40 degrees, well, every time you drive, you're peeling a little bit off of the tire. So I don't think that whether it's an electric or gas or hydrocarbon. It has a factor. I think it's more of a case where how many miles people drive.
Yeah, I mean, my first thought behind that is I don't think it would be much of a difference, but certainly electric vehicles still need tires, and I don't know of any non-rubber tires or anything that's gained traction recently. So the market for it isn't affected by the electrification trend. Unfortunately, this is all the time we do have today. Elio, I'll let you make some closing remarks, and then we'll end this. We'll also post this online for replay purposes, and we'll send that out to everyone who attended today.
So again, thanks to all. If you look at the history of Ecolomondo, Ecolomondo is a company that is serving purpose today. It's a culmination of many, many years, some visionary people, and the technology itself. There are many companies that are staying in what they're going to do. There are some that are saying what they're doing, and like Ecolomondo. However, what they're doing and what Ecolomondo is doing doesn't come even close. We have invested substantially in areas that people are still dreaming about. People that invest in Ecolomondo are investing in the real deal. They don't need to worry. Ecolomondo has a great management team, and it's got a great technical team. We are making things happen for you. And please understand that delays are sometimes beyond the control of men. Pandemics, TSXV strikes, like shortage of materials, labor shortages. So these are all things that are beyond our control. So I appreciate that everybody's been very patient, but patience is sometimes a virtue, and payback will come soon, I assure you. Thank you all.
Thank you, everybody.